Welcome to Stock Talk with Nico Kritikos. Today we're going to be going through Lululemon stock, ticker LULU. Now, this is not a company I've owned in the past, but this is one that I've always kept an eye on because of how interesting the company is and how much they've grown over the last couple of years. So past 5 years, this stock is up over 350%. However, in the last couple of months, the stock has fallen about 30%. And what Lululemon does is they operate in the high-end athleisure clothing products. And you can see here that a lot of their items cost at least $70, if not $200 or $300. So they're definitely not cheap. You can see on their Instagram page, they have almost 4 million followers. So they have a very large, loyal fan base or customer base. And they work with lots of different social media influencers, and that is one thing that really sets this company apart. Now, if we look at, before we get into Nico's stock market checklist, I want to bring up a couple points about how they acquired a company recently called Mirror. And this is, let's see, if you don't know what this looks like, this is a new, you've probably seen commercials for this because this definitely got a lot of attention during the pandemic. As people were, while people were buying things like Pelotons, they were also buying things like this Mirror product that you can see here. And it pretty much just is like something to get people motivated to work out while they're at home. And so that is that. They bought that company for $500 million. Next up, we have the fact that this company is they're supposed to make higher quality products. And they have how I said earlier, they have a really strong brand image for doing that. And one thing they've shown these last couple of years too, is that they also have strong pricing power. As you saw on their website, even though there's other companies making similar products, Lululemon can still sell their products for higher prices because of the reputation they have, the quality of their products, and the brand image that they have. So then if we move on, we can see that some of their growth vectors for the future are going to be things like men's fitness items, because the growth for that category has grown 44% over the past 2 years compared to women. They started off as dedicated more towards women's products, but now you can see women's products is not growing as fast as men's products. Then we have international markets. You can see over the past couple of years, there's been 42% growth in international markets compared to North America's 23%. And then finally, we have that they're getting involved in other things like other fitness products and services like the Mirror product, or they're trying to get into other lifestyle and self-care services like yoga studios that are connected to their retail stores. So that is a basic overview of what the company does. Now, if we get into my checklist, we can see that the first thing we want to look for is if the stock is oversold. And as you can see here, I put a yes because this definitely counts as a stock that has been selling off. It hit $478 in November, and now it's $306. So it's definitely come down a lot. Next, we have revenue and net income increases. And you can see, let's see, right here, that in the bottom right, you can see here that revenue and net income has been growing very nicely over the past couple of years. In this past year, they did $4.4 billion of revenue and $588 million in net income. As far as their price to sales, and this is forward price to sales and forward price to earnings, we have a forward price to sales of 5.5 with 16% revenue growth expected for next year or for this year. And then a forward price to earnings of 34 with 18% EPS growth expected for 2022. Then, so those are both going to get a yes. Those both count as healthy because my general metric, and we're going to compare them to some other companies in their category, but my general metric is for price to sales, I like the percent growth to be at least double what the forward price to sales is. So they did that. Then for price to earnings, I like the revenue growth to be at least half of the forward PE, if not more than half. So 18% is more than half of 34. So that gets a check as well. Next up, we have, is the company innovative? Do they have a moat? I put yes. This goes back to several things. There's several different reasons you can base this off of. One is the athleisure space. It seems like they kind of were one of the innovators and developers in that space. And there's other companies that operate like in that space, like Nike and Adidas, but it seems like Lululemon has done a good job keeping their edge, keeping their brand image, and how I said earlier, being able to maintain those higher prices because of the power of their brand. So that's the other thing, is they have a brand reputation and a brand loyalty with their customers that gives them an edge as far as selling high-end products. Then we have the other thing that I would count as innovative is the way they make some of their products with the materials and the research that goes into it. It seems like they also pay a lot of attention into like customizing the clothes to exactly how people want it. So like as far as things like moisture absorption of their materials and stuff like that, it seems like they put a lot of attention on that aspect as well. So that's just something else that sets them apart. Then we have, is the industry growing? Yes. There are lots of things that point to athleisure being a new growing category as far as people wanting to be comfortable, people wanting to have clothes they can exercise in and also go out and do other things in. So that seems to be and there's also, the other way you can look at this is the other growing industry would be the men's category, because how we said earlier, that's growing over 40%. And you also have international markets that are growing. And so those are a couple different industries that are in the growing growth category. So then we have return on invested capital. It's very high, 46. We're going to compare this with other companies too, but a return on invested capital of 46% is extremely high. You're not going to find that too often. So that definitely is going to get a yes too. Let's see, it looks like they hit, it looks like every single one they got a yes in. So this is actually a perfectly rated company. I would pretty much give this a 10 out of 10. Next up, we have healthy margins, 15% profit margin. That's phenomenal. Most companies don't have that. Healthy cash flow, yes. If we go to their cash flow statement, you can see over the past couple of years, they've been steadily growing cash flows. And see, as you can see here, 2018, we were doing 489 million in operating cash flow. This past 12 months, they did 1.3 billion. So definitely making a lot of progress there. Next up, diverse revenue streams. As I mentioned earlier, I gave this a check because, so you have women's apparel, men's apparel, they're having services like a yoga studio connected to their store. And then you also have things like the mirror company they acquired. So they're definitely, paying attention to innovating their products and getting into new sources of revenue. They have international markets to get into, and the whole TAM for apparel for men and women, that's got to be billions and billions of dollars. I think it's over $200 billion. So there's plenty of space there for them to operate and keep growing. Then as far as the balance sheet goes, these three all get a check. They accomplished all those. And then we have a share buyback or dividend. They are buying back shares, and the share count was down a little under 1%, not a huge deal, but still counts as a yes. They're not paying a dividend yet. They said they don't have any plans to pay a dividend, but as far as the share buyback goes, things look healthy. Finally, we have, is big money interested? And yes, if you look at the holders, as far as insiders, there hasn't been any insider purchases the last couple of months, but for big institutions like this, you can see 92% of the float is held by institutions. And then you have big companies like Vanguard, BlackRock, T. Rowe, all these companies that are invested billions of dollars into this company. So things are looking good there. Then, so they had a check on every single one. That's pretty, it's not very common for a company to do that. So this is a 16 out of 16 score. Then last thing I want to show you is just this comparison of them compared to other companies. We have Lululemon, Nike, Under Armour, and Adidas, and then I put the average for each category. This is forward price to sales percent growth for expected this year, forward price to earnings, EPS growth expected for this year, return on invested capital, and then profit margin. So forward price to sales, Lululemon, and forward price to earnings, Lululemon does trade at the highest valuation for all these other companies. However, it's for a good reason, because look at their sales growth is they're expected to outgrow all these other competitors, and EPS growth looks like it's not supposed to grow as fast as Nike or Adidas. So maybe that forward price to earnings number might be trading a little bit rich. But then look at the return on invested capital. This is another reason. Their return on invested capital is way above average. And then same thing with profit margins. They're even beating out Nike in this category. And so things look phenomenal there. So maybe it's possible the stock comes down a little bit more. Maybe it bottoms. It's already at 307. I mean, maybe it comes down a little bit more to like 290, but I can't really see it falling too much below that because I don't know, this company has so much going for it, phenomenal profit margins, return on capital. The management must be doing a great job with where they're investing the money, how they're investing the money, what companies they're buying out, how they're marketing their business and their products on social media. They have almost 4 million followers. That's a great sign. Obviously, their customer base is willing to pay up for this company, even when they can get, other brands like Adidas or Under Armour for cheaper. They're still Lululemon's able to maintain that pricing power. Then I think most of us can agree that this market segment is not going away. And I mean, it's kind of a newer thing anyways, this athleisure thing. This has really gained more popularity in the last 5 to 10 years. So the next 5 to 10 years will probably be great too. So I think Lululemon has a great future ahead of them. How I said, I'm not invested in this company yet. And really the only reason is because as you can see here, I'm pretty much, my capital is almost gone to zero because I've spent so much money these past couple months buying other businesses. But yeah, I mean, this, how I said earlier, it got a perfect score over here. And I don't know, everything looks intact. The valuation has come down a lot, which is a good thing. As you saw here, the forward price to earnings is 34, which is higher than the rest of the companies, even though they have some lower EPS growth expected. But still, that's not the end of the world. That's just one thing. You're getting a company that has 46% return on invested capital and managed to still grow revenues over 20% during the pandemic, which is also another great sign. So yeah, I would definitely consider this stock a buy. If you guys have any opinions on this company, comment down below. Let me know what you think. Is this a company you're going to buy? Yeah, let me know what you guys think. I'll see you in the next video.